Hello and welcome to the Decrypting Crypto podcast. It is Thursday, October 2nd, and we're back as usual with Off-Chain, your weekly recap of the biggest stories in the crypto space. I'm Matt House-Barbie, and as always, I'm here with Austin Knight. How you doing, Austin?
Doing well, Matt. Bitcoin looks beautiful right now, huh?
Oh my God, what a crazy week. Actually, I at the start of this week, I was kind of worried we were about to dip back down. Bitcoin was facing a little bit of resistance. I actually, quite annoyingly, closed out a long that I had on ETH at about 4,100 to then watch it rip straight through. So there is my sacrifice to the markets. You are welcome, everybody. I have sacrificed to the Uptober gods, and now here we are. But it does feel like we're coming into a little bit of Uptober. The US government has shut down. It's my favorite time of the year. It's almost like an annual celebration at this point. Maybe less so if you're an employee of the federal government. But you know, it's swings and roundabouts, I guess. But it seems like the markets have shrugged a lot of that off, and everything is up only right now, especially equities as well.
Yeah. So should we get into that today? I mean, there's a lot to talk about there.
There is a lot to talk about. So why don't we just take you mentioned that Bitcoin has been in an up only. I mean, let me just have a little look here. What's the chart saying? Probably should have these things ready, that would help. All right.
We're showing like 119.
Oh,
so
that is absolutely beautiful. That's a great chart. I'll actually bring this chart up. Let me just make it a little bit easier to see for everyone. All right, where are we? Share screen. Yeah, BTC looking really, really strong. I think what's been quite exciting. I mean, when we were down here at like the 109, kind of 110 stage at the end of last week, it was looking a little bit precarious. And then, we just absolutely ripped through and has had some really nice continuation and momentum now. And I think the big thing that a lot of people were looking out for was this kind of level around 117, which BTC really had to break through. Otherwise, we would have expected, because there's quite a lot of resistance at that level. And if it kind of rejected it, we would have probably seen another drop back down to kind of like these levels again. But it has been incredibly strong, and has been ripping all the way through. I think a key piece here is that for this cycle to have more strength, and for us to see kind of what so many people call for, like alt rallies, things like that, we need this strength in Bitcoin to carry on. I think if you start to see weakness in Bitcoin and the only strength coming from alts and in ETH, then it starts to get into the stages where you're thinking, okay, we're getting close to the end of the cycle. So it feels like right now, if we can kind of break through kind of these levels, we'll get up into the territory of challenging new all-time highs for BTC. That feels really good. I think also ETH performing really strong, probably lagging BTC a little bit. Looks like it's about to turn a little bit bullish here on like the EMAs, but again, all the way up. You'll see this is exactly where I closed out my long. I caught the bottom and got scared that we were about to just drive all the way back down and chickened out. But you win some, you lose some. But I think good momentum. I want to bring up one more chart, which is the wildest chart ever. Do you remember
Hmm.
back in 2017 when we would talk a lot about privacy coins, Austin?
Oh my
Uh,
gosh.
Monero, Zcash, things like that. I'll be honest. Outside of the recent like crazy situation with Monero like getting hijacked, I haven't really thought about these
Yeah.
coins in a long time. Well,
We
I was
talked
just
about
looking
them
at
a
different
lot
charts.
though
I
back in the
thought I'll
day.
bring up Zcash. Just see what's happening in that world.
Hmm.
Holy shit. Unbelievable. Let's like take this to like the daily. It's absolutely wild. In fact, like let's show like the weekly. Actually, that's going to be an absolutely terrible way to view it. It is just on another level here. This is, I think we're up something like 60% in the past 24 hours. It's like a true god candle that I don't really know where this is kind of coming from. I know there's starting to be a lot more discussion around privacy coins in general, but honestly, kind of surprised to see this get a bid. Maybe there's some news that I missed around some of this, but yeah, pretty impressive. Pretty impressive
Yeah.
chart. And I think like a lot of the like kind of everything's been going up. I was tracking Pump for a little while. Pump Fun had a really, a lot of these after this area where we kind of topped out locally a little bit on the middle of September. It's been a lot of drawdown, but you kind of see the past 24 hours most majors
Hmm.
have seen at least a 10% gain. So, like, there's some critical points. I think ETH rallying is what will drive a lot of these ones up a little bit more. But right now, the story really is BTC, and I think that's the most important part right here. So,
Hmm.
looking good. Uh, Looking pretty good right now, which is not really something that we've been saying a whole lot with conviction. I think this is the first time in quite a while where I felt personally like, okay, this is looking really strong.
Yeah. I mean, I definitely think that, crypto is riding on this optimism around the rate cuts. But
Hmm.
at the same time, we kind of have this government shutdown looming over us, which, that is going to disrupt data reporting, which makes it harder for the Fed to guide policy, which is going to increase volatility. If you're not familiar, we do have U.S. government shutdown season in full effect right now. And yeah, what happens is that this freezes economic data releases, and as we all know, markets are trading on expectations. And if the Fed can't see inflation or jobs data, their policy is going to become more uncertain. But I think that the irony of this is that, at least in the short term, a shutdown could actually extend some risk on behavior because the Fed would err dovish without data. But
Well,
that's a
and
bit of a short
also,
fuse because
did you see the data as well that came just before just after the shutdown, the last kind of private payrolls data that we had? I think it was like the ADP payrolls, and it showed a huge decline in payrolls, like really poor
Hmm.
jobs like report. And now everything's kind of like closed, and it's like, well, if the Fed doesn't have anything by end of month for the rate cut decision, that doesn't look very good. I saw also on Bloomberg earlier today, they did a really cool thing where it's looking at, because obviously we would have had job openings data today, uh, but we don't because of the shutdown. But what they were looking at is the number of like Cobra inquiries. So, like, obviously, when in the US you get kind of
Hmm.
severance and you're looking to like get some a stopgap for your insurance, you'll kind of claim Cobra, and that spiked up quite a bit. So yeah, I hear you. I think it's going to be. I don't really know what to make of it, but I agree. It could be bullish risk in the short term, at least.
in the short term. But definitely when the data resumes, volatility is going to spike because we'll end up catching up with what direction the economy is actually going in. So it's an interesting one. At the same time, there's been this whole perp dex war happening, right?
Oh man, I feel like this is like what has taken over crypto for the past at at least month or so. I mean, there's been a huge amount going on with perp dexes, but it's really come to the fore now with major competition coming into hyperliquid. And I will say, of all the like narratives and stuff that we see pop up, this is stuff that I really like I way prefer this to like when we're just talking about which meme is going to run, right? It's like, hey, here is some like genuinely amazing technology and teams that are building great tech that are battling it out and value is accruing from it.
Hmm.
It's pretty cool. So now we've talked a lot about hyperliquid, and hyperliquid has had pretty phenomenal growth all year and has kind of become it's definitely become the leading like perps dex, decentralized dex. It's been challenging even some of like Binance's volumes not that long ago. But what's been interesting is we've had this flurry of competitors. There's going to be loads more coming because for anyone that isn't very aware, obviously from myself being at Kraken, understand the unit economics of the different revenue generating areas of crypto trading, and perps are the biggest. That is where most of the centralized and decentralized exchanges make the lion's share of their cash, right? And this is why it's such a lucrative area to dive into. And there's a lot more regulatory scrutiny that bigger exchanges have to make sure they're abiding by, whereas the decentralized ones maybe less bothered. So
Hmm.
yeah, we've had Asta, which has kind of been called out quite a lot by CZ, and their token launched. A whole load of drama around that, which I don't think we even need to go into. Typical stuff, but has been doing a huge amount of volume. Lighter, which I was actually playing around with yesterday. Pretty cool product. EdgeX being the other like big one. There's a bunch of these, loads more to call out. Obviously, things like Jupiter exist as well that do perps. But what's been interesting here is there's been a load of commentary around, oh, like uh Asta is overtaking hyperliquid now on trading volume, and Lighter has just matched like X% of Binance's or overtaken hyperliquid on volume. And the important thing to think about with this is like volume is very easy to manipulate in perp dexes and in perps in general, because it's all first of all leveraged, so will be inflated quite a lot. And a good way to look at things is like actually comparing that to open interest. So how many like actual like margin positions and open interest there are on different markets. If you've got open interest that's higher than volume, it's very healthy, or at least close. You want a really good ratio there, showing like real trading. What you'll often see is if there's loads of volume and low open interest, there's a whole ton of wash trading happening, right? And what you start to see, and what is the case in a lot of these dexes when they're pre-token or pre-airdrop, is they will have points programs that reward you for volume, and they will offer incentives for, especially on the taker side of trades, to just do more volume. So people will like, and there's like very strange incentive structures where you get more points for liquidations and stuff like this, where it's just like, okay, like you're making big bets here. You're just going to go get yourself liquidated for points. However, loads of people got rich off of hyperliquid. So they're probably doing the math. This reminds me a little bit of like the Blur OpenSea wars of like
Yep.
the last, well, just after the last cycle. So we're seeing, what we're actually seeing though is like outside of hyperliquid, the open interest to volume ratios of most of these DEXs are like not even comparable. I saw a great tweet from Hasib from Dragonfly Capital, and this was from like a couple of weeks back. I should pull the up to date data, but the ratios remain. But this was like a couple of weeks back when volumes and OI were actually a little bit lower. But you had like Lighter that back then was doing like 4.31 billion in volume and 1.26 billion in open interest. At the same 24-hour period, Hyperliquid was doing like a billion more, 5.21 billion in volume, and 15 billion in open interest. You can kind of see the differences here. And, Hyperliquid have had some days where they've like 3x that volume in the past few days, which is really impressive. And same with Asta. So I think what's going to be interesting is seeing how this whole space plays out, especially when everyone is like post token launch, post points program, and they actually get into like the day-to-day growth of these platforms. You're seeing some of these platforms come and these perp dexes come in, and they're going to really drive fee compression, where they're coming in is saying, okay, well, Hyperliquid is charging fees across here. We're just going to do 0 fees. And then you get this critical mass of enough of the perp dexes moving to either 0 or low fees, that it creates compression across the whole segment where all of them have to move fees down, their revenue and margins get squeezed. So it's like, I think there's going to be a huge amount of competition over the next, in particular, 12, 18 months. It's going to be really interesting to see. Perp dexes aren't novel, new things in crypto. We had the likes of DYDX, GMX for a long time, very different models. But I'm really excited to see how all of this plays out. And hopefully we start to see like more and more really cool innovation and new models being built in and amongst all of this stuff. So yeah, a cool space, I think.
It is, yeah. It's I think the really interesting one to watch is straight, as you can kind now, but the margin profile is going to get squeezed. And I think that the long-term winner here is going to be whoever builds some real user stickiness, like, the user experience, their integrations, their ecosystem, not whoever is throwing around the biggest airdrop. I mean, we've seen this story play out time and time again. Airdrops are like a really great growth and hype tactic, but the longevity is in the actual product that's being built.
Yeah, the cool thing I think as well about a lot of the perp dexes, I mean, we've seen this with Hyperliquid, is I think it's been one of the few areas of crypto where the growth in revenue of the protocol, the product, right, that's actually creating, which they're all creating very meaningful revenue. Hyperliquid's creating billions of dollars in revenue with very high margins. But they're actually accruing to the value of the token. Oh, it looks like I've just lost Austin. He's probably fed up of me talking about perps. I'll carry on, and we'll have Austin join back in. But we, what we're seeing is a lot of these tokens, like Hyperliquid's token, the revenue created from Hyperliquid is actually being used to then, obviously run structured buybacks of the token. So the more revenue that's created from the protocol itself, the more we're actually seeing come in terms of value to the token itself. you're back, Austin. You were fed up of what I was talking about, so you just like, I'm out. We lost you briefly. It's all good.
Yeah. Yes, yeah, for a moment there. All right, so should we move on to there was this other. It's not really a news story. More of
Mm,
just a theme that I'm seeing that I thought would be interesting for us to talk about, which is this collision that is happening between AI and crypto.
yeah.
And so one example of this is that Google you may have seen just recently released this thing called AP2, which is their agent payments protocol. It's basically a framework that allows AI agents, like, autonomous bots, basically, to initiate and complete payments without any human intervention. So what this does is it creates a financial layer for autonomous software. Traditional rails aren't suited for this type of thing, but crypto definitely is. So you could imagine an AI bot that could shop, hire contractors, run arbitrage, or even speculate without a human pressing send. And this is, this could be programmable money meeting some autonomous intelligence here. Imagine starting to apply this to crypto markets and what this would mean. I think that it brings with it some very big infrastructure implications that
Mm.
our space, in terms of the tech, but also in terms of the regulatory regime, is going to have to start staring down. There's these looming questions like, how do we verify that an AI agent is acting within the rules and it's not laundering, it's not phishing? Banks are definitely going to push fiat rails, but crypto is always on. It's permissionless settlement. So I think that because of this, crypto could win up pretty big, and it could actually tip adoption of stable coins, especially outside of the US, because AI agents need money that moves instantly and globally if they're going to be doing something like this. And outside the US, stablecoins are already the easiest way to access dollars without relying on slow or restricted, fiat banking rails.
It
So,
feels like such a logical step to me that,
mhm,
like, it what's the simplest and easiest way to fund uh like AI agents, right? And like stable coins are built for this. It's perfect. I don't know
mhm.
if you also saw, this is kind of from the other way around almost of the Google example, but Stripe's integration into ChatGPT that they're
Yeah,
building. Yeah, whether you're gonna be able to just check out directly inside
yeah,
ChatGPT. This felt like to me, and of course, like with Stripe, you can pay with stable coins. They're very pro. I mean, they've built a whole layer one, or are building a whole layer one as a payments blockchain. But that one felt to me like, I remember at the earlier stage of my career when mobile was really just starting to become a thing where people would actually browse, and the shift away from desktop usage to mobile. And I was doing quite a lot in e-commerce back then, and the like, the conventional wisdom was basically no one's going to buy high ticket items on their mobile device. They'll always go
right.
back to a desktop. They'll always go back to a laptop. And I feel like this is going to be
I think
this
I've
whole.
said that.
Yeah, it was hard to conceptualize it right at the time, and I think we'll have another
Yeah.
one of these moments now with AI, and with things like, even like, people aren't gonna buy just through ChatGPT. No, like, I guarantee we all will be doing this, whether it's ChatGPT or otherwise.
Full on.
Yeah,
Way
and
way
then
sooner
take
than we expect.
100%. Like, you think about 2 years ago, how many people were using ChatGPT? And now, who doesn't?
Mhm,
Right? Like, and I think to your
mhm.
point on, like, then taking that one step further, I think this is the real leap cognitively. It's like having agents just manage your day-to-day cash on your behalf across lots of different things. That's a big leap, but it will be very commonplace in, 10-year time. We'll be looking back at this, and it will be just like discussing the mobile versus desktop buying situation for sure.
Yeah, it's so true. Yeah, you're bringing back memories here. I wonder if I could go back to myself like 7 or 10 years ago and say, "Hey, you're gonna buy an entire car on your phone, so shut up."
Right. Right.
I
Yeah.
mean, like people
Holidays,
buy
everything.
Teslas on their phone.
I
Yeah, yeah.
literally bought a
Uh,
Tesla on my phone. I literally bought a Tesla on my phone. I am that person. Yeah,
I
and
yeah
that's it. Like that would have
yeah.
been an insane thing to think about. Um,
Hmm.
I think I did a mortgage through my phone as well. Like
Wow.
this is pretty much how it all works now, right? Like
Hmm.
open bank accounts for the developed world
Hmm.
as well. Sorry, for the emerging market like side of things, the their phone is like the most valuable thing they own.
Yeah,
It's everything for them. It's payments. You go to a place like, well, I don't need to tell you this. You're in Brazil, right? Well, you've been in Brazil, and like places like Brazil, it's like everything is done through your phone, right? You don't have a phone
yeah.
like that's like not owning a bank account, right? And everything is
Hmm.
managed that way, and it's a little bit different in the way we use like mobile devices here, but I think it's going to be same thing with AI for sure.
Yeah, it is. And definitely, to your observation, OpenAI and ChatGPT have the ambition of becoming the shopping destination
Oh yeah,
online, period. The digital shopping destination, even, I would say. And that's why, so many partners are currently integrating with them. I mean, they have a deep integration with Shopify. You talked about the Stripe integration. At Square, we have a deep integration with them. We built an MCP specifically for this, basically,
yep,
because if you try shopping with ChatGPT today, as I'm sure most of our audience has, it's not very good at it. Actually, it's still
no,
like it's basically just a bad Googler when it comes to shopping. I mean, ChatGPT is good at a lot of stuff, but in my opinion, the shopping aspect of it is like pretty weak right now. It will
it's still figuring
typically
out
make
knowing you very well,
yeah,
right? It's
knowing
kind of like
you and
early days of
also
Facebook.
mhm. Yep, it definitely. It's trying to figure out how to know you, but it's also, I think, struggling to interpret what is good information in the
Mm,
shopping process and what isn't. And I also think it lacks access to all the information. And a lot of
sure.
the time, the most critical information is actually not even in text; it's in an image. Like you're going through the images in an Amazon listing, and you're looking at the nutritional data on the back of the package or something like that, or uh, you're looking at reviews, and it doesn't seem to totally understand reviews very well. It doesn't the I think that the structured data in e-commerce just isn't quite there yet
Mm,
for AI. But it's going to be very soon. Like this is a huge opportunity that all of the consumer facing LLMs are very clearly trying to address, but most likely ChatGPT is going to win because it's the most consumer friendly already. Um, and then when you imagine if you could go into ChatGPT and you could like really trust that it's going to be a great purchasing experience, and then there's opportunities to start automating that through
oh,
ChatGPT. I think that it would be huge. I mean, I can give you like a real life use case that is working really well for me right now with shopping, which I've really enjoyed, which
yeah.
is that I'm training ChatGPT on my wine profile. So
Oh, hello.
basically, like I've cataloged all of the wine in my cellar, and I've told it all about like what type of wine that I like directly, and also my wife as well, because we have different kind of profiles. And then every time that we have a glass of wine, we'll like rate it and tell ChatGPT why we like it or don't or whatever. And then now I can go out to like last night I was celebrating an anniversary with a friend, and we all went out, and I just took a picture of the wine menu and said which one of these bottles would we like. you know, and
No,
it just
that's
picks a bottle.
amazing.
And it's like getting, yeah, it's getting really good at it.
Wow, that's
I
such a
haven't been
great use
disappointed in
case.
like the last 3 months.
That is
Hmm.
incredible. I'd never
Yeah,
thought
so it
about
can
that.
do stuff like that.
I think because
Yeah, I
I
mean,
was
it's
thinking
amazing, right?
about
Because
this.
like,
Sorry, you go ahead. You go ahead.
well, like, it's amazing to me that it seems to struggle with Amazon, but then it can somehow like deeply understand wine, which
I
is like
think
there's so much less information about that.
it's also so much, and I think this is what I wasn't articulating very well. It's like understanding you a little bit, where it's like
Yeah.
you have to really put the time in. I think to help it understand subjectivity, right? Like it's pretty good on like
Hmm.
objective things, but what's your very specific profile? There's so like wine in particular, the size of the market, the options, like different flavors, taste profiles, like grapes. There's so many variables that need to come into play. It needs to like really curate. I was thinking as well, similarly about this is like, you know, cataloging your wardrobe and
Hmm.
discuss it. Like, I think that's going to be a very common thing, right? Where you'll be like, all right, scan through your wardrobe. This is like the styles. They'll be like, okay, here are a few combos that will work well within your existing wardrobe. Here's what you should add. Here are things that you might like that are very similar that fit certain criteria. And to your point, when you start seeing like more of ecom catch up, deeper integrations, we'll probably have purpose built kind of like deeper integrations into some of this stuff. No doubt, as wearables become kind of less lame and more effective, I think like we'll just see like you just scan stuff and it's like done. So,
Hmm.
but let's bring us back to crypto as well because we talk about all of this.
Yeah.
This is really cool, and it is really related. But like, where do you see at least like the intersect of these two? Because I've personally, especially as someone who does a fair bit of angel investing, over the past 2 years, have just AI and crypto, the amount of decks I've seen, and it was all just focused on like decentralized compute. That like is the
Mm.
way I would just was the only really compelling thing I really came across. And it's just a bit like I don't know. Is that the killer edge use case? What's your thinking?
Well, I think that whoever builds the identity and compliance layer for AI payments is
Mm,
going to unlock some incredible value. And that's like really the thing that we're staring down here is this is the intersection of crypto and AI because it unlocks the ability for AI to use money in like really meaningful and automated ways. But of course this also brings a lot of risk with it, and that risk mitigation is going to be like a critical aspect of this. You can imagine an AI bot army, running rug pulls or phishing or manipulating markets, and they would be doing this 24 way faster than humans could respond. And so then it sort of poses the question like, if an AI executes a fraudulent transaction, who is on the hook for that? Is it the model
right.
creator? Is it the deployer? Is it the payment network? I mean,
And we start to
regulators
get into
haven't
like the
even
tornado
like
cash kind
started
of
to
debate, right?
yeah, yeah. I mean, it's these things are operating autonomously, and I think that something that this reminds me of is this same sort of fight that we had back in the day with DeFi, which was this idea of code is law versus regulation is law. But now we're supercharging this with AI and all of this autonomous decision making. And if you're not familiar with the code is law, regulation is law thing, in DeFi, there was this idea that code is law meant that whatever the smart contract executed was final. So if it happened on chain and it's already done, like what's done is done. It's in
Mhm.
code. It's done. Leave it alone, right? But regulators push back really hard on this because what's done is done could be a really detrimental, fraudulent transaction that needs to be unwound. And
Yeah.
they said, no, actually, code is not law, regulation is law. And the legal precedent needs to override the code. And I think that that same clash is reemerging here. And in fact, the SEC is already beginning to probe AI use in trading. They haven't really, signaled this specifically about crypto, but in this year's exam priorities, the SEC highlighted how firms use AI models for portfolio management and risk and marketing. And the concern that they have is an AI conflict of interest, which would basically nudging users toward higher fee products or riskier trades.
Yeah.
Who is responsible for that? And if you extend that to crypto, and you've got automated systems that could funnel liquidity towards certain tokens or exchanges, I mean, there's some huge implications there. AI and crypto already independently are in probably the brightest regulatory spotlight from a tech perspective. When you combine those two things, there's a double regulatory spotlight,
Yep.
like the brightness of the sun. Um, and because these areas are both already high risk in regular regulators' eyes, I mean, this could heat up pretty quickly. I think that if an AI model executes crypto transactions, that could fall under both AI accountability rules and financial services oversight. So there's a lot of overlap there. And early precedent suggests that regulators aren't going to be carving out exceptions for these things.
Yeah,
So,
and I think we've seen in like stable coins already a lot of like um the kind of code is law stuff like playing out, right? We saw Circle took the stance
mhm,
with USDC where they will freeze USDC in wallets. We saw that with the anything that's passed through Tornado Cash that was happening, et cetera, et cetera. We've seen early days like kind of very primitive AI crypto agents. I'm trying to think of what the ones were. It was like AI XBT and other ones that are like, almost like
mm,
trading bots that were getting funded. And we had like an initial wave. It felt a little bit more memey than anything right now. But yeah, as someone again that's in like the exchange side, this is any ways that can improve trading efficiency, can improve the flow of liquidity, can help guide um, clients that are traders like into better opportunities and help them succeed more is going to be very beneficial. And I
yeah.
think we'll see this not just in crypto, but I don't know if you saw the whole thing, which is like almost the trifecta here, which is completing the trifecta when HSBC recently used a quantum processor to successfully model and project the price of a bond like
Mm,
60% more accurate than like that's ever been done before. And it was like a simulated test, like they didn't do it for live, but this is where we're going. You've got the AI piece and this huge like shift in power demands, compute. We're also going to intersect, I think, in the medium term now with quantum pretty soon. The demand for processing
mhm,
of these AI algorithms and the LLMs that have been built today, that it's only going to just reach kind of new highs. You got Meta
mhm.
building data centers the literal size of Manhattan. Like,
Yep.
there's only one way this goes. And I think you start layering in then decentralized like payments, funding. Yeah, it's only going to get bigger. But it
It's
it's
true.
exciting, but it is also, a lot of things to consider along the way here.
Yeah, I mean, from a regulatory perspective, I think that this could lead to actually a whole new layer of requirements for AI model audits in financial services in general, really, not just in crypto. And so this would mean, from a crypto perspective, you're not just talking about code audits for smart contracts, but you're talking about algorithmic fairness and bias and risk audits. And this could in itself become a whole new compliance industry, which is why I say, I think that whoever builds the identity and compliance layer for AI payments is going to unlock some incredible value here, because there are real use cases for this, but there is also like real risk, and there are real unanswered questions.
Mm.
And whoever figures that out, I think it's a big opportunity. So I was kind of just thinking, how is this going to play out strategically? Like, who are the winners and the losers in this whole collision of crypto and AI? I think that some of the winners are going to be crypto projects that build the compliance and monitoring tools for agent transactions, like the KYC or AML for AI. I also
Hmm.
think that stablecoin issuers that can plug directly into things like AP2 and these AI ecosystems are going to be winners. And I think that oracles that provide verified data for AI decision making are going to win. On the flip side, I think that centralized rails that can't adapt quickly are probably going to lose out from this, and protocols that ignore AI compliance, they're probably going to eventually get shut out of this. So all of this is to say, I think that AI and crypto are both treated as like these sort of discrete or distinct topics right now that are both huge in their own
Yeah.
right. There's a ton of hype around AI, and there has been a ton of hype around crypto for quite some time now. But there is opportunity in the middleware, or basically the pipes where AI and crypto intersect. I think that's really starting to happen in earnest now. So, interesting one for us to keep an eye on. I imagine that this is going to be a kind of recurring theme on the show.
I think we're going to talk about it a lot next year, um, as we start to see kind of, in particular, last year's cohort of funded startups reach kind of another levels of maturity, especially if capex spending around AI continues. We see this continued push
Mhm.
of deregulation in the US around crypto. It- it's going to come, and I think we're going to see a lot of innovation happening, especially with so many major payments infrastructure, companies, banks, exchanges, all innovating huge amounts in both of those areas, and spending a significant amount in both those areas. Yeah, it's going to be exciting. I think we really are on like this potential paradigm shift for the first time in a very, very long time that could change a lot of
Mhm.
things in what we do. Alrighty. Well, in the time that we have been recording this, Bitcoin's pulled back a little bit to 119k, uh, but it's still looking good. Still looking good. But we'll keep an eye. I still think Uptober is upon us, and we'll be in for hopefully an exciting month of price action. But we'll see how the next week plays out, and I'll see you next week, Austin.
Yeah, talk to you then.